Hi, everyone, and welcome back to my segment of Mish's Market Minute StockCharts TV. Once again, I always have a lot to cover. So I thought we'd have some fun today. Last week when I did my video on YouTube, I got a comment, could I cover alcohol and beer stocks? And I thought, okay, not only that, we'll throw in a pot stock too. So that's why I'm calling this Everybody Must Get Stoned. Of course, that has a lot of meanings. And one is the market about to crash, or we could say, is the market about to get stoned? Should we watch volatility? That certainly is throwing stones would create. Is it time to get drunk or stoned? That's when we're going to examine those stocks. And then I have a couple of other picks that had some good real motion divergence to show you if the market actually holds up. So we're going to start with the indices first and the economic modern family and volatility. I always like to cover the macro because you really need to know where we're at before you get too involved in anything in particular. And of course, I'll go to the beer, alcohol, and pot stock, and then I'm going to give you 3 stocks to watch. Now, what I'm going to do now is I'm going to take this thing off here because I'm going to go right to the charts of show tax bar. Wait, hold on. It's just going to take me a second here because I haven't done this way before, but I'm finally ready to do that. There we go. So in essence, what I can do now, I don't think I have my little pen here anymore though, unfortunately, so you're going to have to follow my cursor until I can figure that one out. That's the next step. But anyway, let's start here with the Qs. Last week I had shown you how this had a divergence in momentum when it went to the new high and the big sell-off that happened. We actually talked right here on this day, and you can see what happened. It continued to follow through. But we also talked about the fact that we wouldn't get too negative in the market until NASDAQ actually took out the 50-day moving average, and it's sitting right there. Now, what really strikes me about this is this sort of bear flag potential, which it actually broke down from today. So really, at this point, we'll look for that confirmation, but if it gets a couple of closes here under this 50-day moving average, you could see the momentum down here has already started to show negative. It's underperforming the SPY, and also the volume broke down under the moving average. That to me would mean that we could see a move really somewhere around $23 lower from that 272. So you're talking about really about 255, and that would make sense. Wouldn't be very pretty for the market though. Now if we move on to SPY, very similar in that the SPY is also holding the 50, in fact did not get the clean test of the 50, but again looks a little bit bear flaggish with it kind of breaking down. So what we're really going to look at now is what happens here, and this is why I like using these charts live now, is because I can actually manipulate them to see price. And so if we get a breakdown under that 331 level, that's going to actually break down under the 50. Now the slope in both the NASDAQ and this are still pointing up. So it could be a weak caution phase. And what would make it a weak caution phase would be it breaks down, flounders a bit, and then we get an announcement from the Congress that they've come up with a stimulus package, and you'll see that flip right back up. So it's not like I would get heavily short, but I would certainly be protective of my longs. Now what's interesting here is that this also is breaking down under the 50 here on real motion. And so what that means right here is that this is already telling you that the momentum is decreasing while the price is still holding. So it seems pretty inevitable that we're going to break that 50. And if we move on to IWM, now the Russell's already broke the 50. They actually are sitting right on it on the real motion. And yet if you look at a weekly chart, which I'm not going to put up, but I'll just tell you, the weekly chart is extremely important because it's showing not only 149 is the big area on the 200 week, but just below that we have 146 on the 50 week. And then we have the 200-day moving average here. So a breakdown to 145, I would consider more of a correction than an actual breakdown. And that's partly because this didn't participate the way the Qs and the SPYs did in the rally to new highs. IWM has never really been particularly strong. It just kind of got dragged up. And that also could mean that it won't get necessarily particularly weak, rather test the support area. If it does go down to 145 and hold, that could also be a healthier sign for the overall market, because it could mean that it's more optimistic that we may see some level of the economy come back. And of course, there's a lot of assumptions on that. Now here's the diamonds, and the diamonds look similar to the SPY. Another bear flag almost breaking down here with the 50 a little bit further away at 272. And here, no divergence. It's still sitting above the 50-day moving average in real motion. And so that's really much in line. The volume is broken down, and it's slightly outperforming the SPY, which is interesting. So that would be a place maybe to go look at some of the top Dow stocks like Boeing, which has had a lot of news lately, and see where that looks if the market holds. Now, if we move to the sectors, we go to XRT. This is retail. Now, retail has actually held up better than most, although it's come off from the highs that you can see here, and it's down below the 10. This also looks a little bit flaggy here. You have a nice pennant. Here's one line, and then here's the pennant part. So if it breaks down under 50, we'd be looking for a test of 48.73. This actually broke out on the weekly once it cleared 44. So it may not be so strange to see this come down to 44 level if it does break down. And again, momentum here is still holding above the 50, but getting closer. While this price is still above the 50, this has not been outperforming the SPY in a while. And you can see again, the volume really broke down, the volume performance under the moving average. So far, what we're really seeing here is sort of a follow through from what I talked about last week, which is that we would probably look to have a correction, and we've had about a 10-15% correction. We would consider that a normal correction unless we actually get a serious phase change. Now, if we move to IYT, that's really doing almost the best in that you can see here it's sitting on that 10-day moving average, a little bit of a bearish engulfing pattern, but our momentum is still very strong. Look how far that is from the 50-day moving average, and it's barely gone down. And this is well outperforming the SPY right here. So essentially, if there's any strength in the market, considering the retail is second to this, I'd say transportation right now of the sectors is in the lead, which is pretty extraordinary. That's the demand side. There's also been talk about an infrastructure money coming through. I really don't see that happening, but nonetheless, for whatever reasons, we won't have to think about it too hard. We can see that demand is still relatively robust when it comes to transportation, and it's certainly not in jet travel. Now let's move on to IBB, which is the biotechnology. And that's shown a lot of weakness. And so this could actually lead the market lower if it breaks down under 124.83 for a couple of days. It's already broken down under the 50, and look at that slope. In fact, if we want to see how phases change, this is a good example, because we had a very similar pattern as what I just showed you in the Qs, where it made a high, came down, looked like a bear flag, broke, sort of hovered around for a couple of days. And then when you had the 2-day close here under the 50 and the confirmation of the caution phase, look what happened. You had another test of the 50, but actually you really went from like 136 down to 125. That's a nice move down. That's what I'm showing you with Qs and SPYs that could happen. We could flounder around a little bit on this positive slope, but as soon as we get those two closes under and the slope starts to go neutral to negative, that's not going to look pretty for the market. And one area that has not participated, had a little bit of hope for like a minute, and that was the banking sector, the regional banking sector, KRE, which also has just broken down under its 50-day moving average. And you can see the momentum, though, is still holding the 50. Interesting. Which means we've been down around this 37 area before. 38 is pivotal. 40, of course, would be amazing. So essentially what we're looking at right now was this a little bit overdone today, along with the oil market that went down, because this is very much tied in with the oil market. And yet, is it telling us that it'll go back up if the rest of the market holds based on the momentum holding? That remains to be seen. And finally, semiconductors. And again, we talked about this, and also very similar to the other patterns, sitting on the 50-day moving average, sort of bear flaggy. And at this point now, if you look at the slope, it's still up, but this can neutralize very easily. So after the great tech rally and the race into tech and the stories about SoftBank and the Robinhood traders and everything else, this is going to be the real test now to understand how novices can get in and make it think that it's easy, and then we find out not so easy. Because if this actually breaks down like it looks like it's going to follow the way of IBB, then we're looking at a pretty nasty correction, maybe down to around 150. I'd shown you a channel weeks and weeks ago. We're back down under the channel, so the channel failed. So that's not so great. Now, the last thing I want to show you in terms of the macro is the VIX. And with the VIX right here, this actually broke down after we had a really nice trade. I think I had mentioned it to you last week. We got out pretty much the same day. We saw a profit target, and then on this day, and then boom. Actually, it was the next day. This day, we saw a profit target, and then we got stopped out with a profitable stop. So now I'm looking at it again. And essentially, what I'd like to see is there's a gap here to 28.16. So we had an inside day on Thursday. It's sitting right under the 10. If it takes out the 10, and I'd give it a little bit of room, and takes out that 28.16, it most likely means that the VIX index is well over 30. And that might be a good play to look to see if you can get a move back up maybe to around 34, which is kind of where it stopped on this spike day. And then you could have a pretty tight risk if you want to do it more actively to underneath these lows, which I can't show you right here, but they look like they're about 26 and change. All right, now let's move on to our next topic. Everybody must get stoned. I'd sing for you, but I'll spare you that at the end of the day. So let's start with Budweiser. I obviously went through a lot of these charts and decided to only show you the ones that I thought could be potentially interesting. And Budweiser is one. By the way, Thursday night, start of football season. It's interesting if you look back seasonally on Budweiser and some of the beers, that as we get closer to Super Bowl, these stocks tend to go up seasonally. So let's just throw that in the back of our minds. But we can see right now, what's interesting to me is, first of all, we're under the 200 and we're above the 50. This is not a bullish phase over the 200. It would be an accumulation phase. And if I just make that a little bit bigger for you to see, this could be bear flaggy too, in which case if it breaks down under this 50, I wouldn't touch it. But on the flip side, because we're looking at not only the outperformance in the SPY, but also in the real motion, well above both the moving averages, this is a true divergence, which tells me that if this can have two closes above the 200 at 58.43, then I would probably look to maybe be a buyer of Budweiser and probably have a stop either tight if it fails under the 200 again, or if you wanted to give it a room under this low right here and under that 50-day moving average. Okay, the next stock I have for you is Samuel Adams. And this is a Boston beer. And this looks even better than Budweiser, in that what's going on here is that we are held the 50, just like everything else, but it doesn't look so bear flaggy like the others. Look at this. It actually kind of cleared what had been the top of the pendant right here at around 830. It's a very expensive stock, my goodness. And so this actually could be over the 10-day moving average, and this high here at, I think this is the all-time high that it's showing you here, not the high today. So if you're looking at a move maybe over 831.50, you can probably have a fairly decent risk to see if it gets some momentum and can actually go to new highs. Interestingly enough, it is not outperforming the SPY. And you want to talk about a divergence, this actually is not showing even being above the 50-day moving average. So the price is, but not the momentum. So before I got too hot with this one, I would also want to see momentum start to catch up a little bit. Next one I'm going to show you is Constellation Brands. This actually looks the best of all of them. Look how we're consolidating here above the 10. We had an inside day on Thursday. We got some resistance up around these high levels, but we are well outperforming the SPY. We have a good real motion indicator here. Volume is good. So if it clears over what would have been Wednesday's high, you have a really tight risk to Wednesday's low. If you want to try something more active, that's what I would go for here. And the all-time high, well, not the all-time high, but the more recent high is 191.11. So I wouldn't necessarily have to wait for that. Again, I would look at it over Wednesday's high, but play it tight for sure. Okay, next one that I've got for you, I thought we would go to the distillers. This one is in Oregon. And what do you notice here about this one? This is already broken down under the 50 and is sitting here on the 200, and it had a golden cross right here. It's a cheap stock, but the reason why I thought this was interesting is the fires that are going on in the West, California, Oregon, Washington State. You can kind of see what's happening here. That would not be good for the vineyards. So right now, it is still holding on the real motion. If this can come back through, let's say that 10-day moving average or around 650 to give it a little room, then perhaps you would have a decent risk to under these two lows to see if this would go back up, especially if it can manage to get those fires under control. And in the same vein, we have a London distiller, which is considered the largest distiller in the world. This is, it's called Distillers and Vintners. And so basically right here, this also broke down and is in a bearish phase right now. But the momentum is showing some divergence in that it's over the 200 and sitting right there on the 50. So this would be another one that I would look at only if we get two closes back over the 50 and we can confirm back into some kind of a recuperation phase. All right, moving along. We also have MO, which is Altria, sort of tobacco, kind of a combination of tobacco, pot, and alcohol. And this is looking pretty darn good as well. As you can see, a sideways consolidation going on here around this 10-day moving average. Let's make that a little bit bigger here so we can see it. And so you had a golden cross here. It was a little far, but the 50 crossed over the 200. It's outperforming the SPY, and it's doing pretty well on the momentum, no divergence. Volume is just sitting under the moving average. So this might be another one that would be fun to look at. It's been much higher at some point. Back in 2019, at the beginning of 2020, it traded all the way up to, what was the all-time high here? No, that's not the all-time high. It doesn't show me, but it's all the way up here. So you can see that it was trading up near 50. So if it takes out really all this work, maybe 45 if you wanted to be more conservative, I would say maybe even over 44, this could be another good shot. So far getting stoned is not so bad. Now let's take a look at GRWG. Now this stock is Grow Generation that just reported earnings, and it actually did very, very well. Interestingly enough, it's in the consumer discretionary sector. So I got some jokes on that, but I'll keep them to myself. So anyway, right now this is sitting under the 10-day moving average. And we've got lots of support here around these levels, which really is about 12. So I just basically put this out as an alert to my people that I'd either buy a dip down to around 12 and maybe risk to under the 50 to give it some room, or I'd like to see it clear over the 10-day moving average, which is 1506, and then I would be a buyer and just risk a lot tighter. It is underperforming the SPY, and we had some of it come back down closer to the 50, but it's still above the 50 here, and the momentum is declining. So that's why I'm looking for some level of strength on that. And that kind of covers all of our alcohol, beer, and pot stocks. So I hope that answered the question and also gave you some good stock ideas at the same time. Now I'm going to give you three more. And these three stocks are stocks that came up in real motion. We have a special indicator that picks up divergence. And so this is something actually that Keith and I looked at together. and one is Lyft, believe it or not. Now, they still have some issues with California, some regulations, but nonetheless, if people are feeling better about getting outside, and some of the restaurants inside are opening in New York, for example, I know in New Mexico, the restaurants are back opening, the movie theaters are starting to open, people might be out taking Lyft rides once again, masked, of course. And so what we're seeing right here is that we're sitting right between the 10 and the 50-day moving average. So it actually closed in a bearish phase, but look at the momentum down here. It's above the 50-day moving average. So what we want to see, it's very classic. I say this to you all the time, and I can't say it to you enough, is that when you have this type of divergence where the momentum is increasing while the price is still sitting there, you wait for a price confirmation. And what that means to me is 2 closes over the 50-day moving average. If we use a round number, I would say over 30 would be probably an interesting place to look at, and maybe with a very tight stop, say under 29. Next one is hog. So if you're not going to take a lift, you might as well get yourself a motorcycle, but don't drink and drive. And so here we go, looking at hog. This actually also came up on the indicator, because if we go down here to the momentum, it's actually doing pretty well, getting away from the 50. And here's the 50 here. It's about to actually have a bullish phase golden cross, and it's outperforming the SPY and doing okay on the volume. So Harley Davidson might be another interesting play here. And you have a pretty good, interesting risk too, because the moving averages connect at 2750 area. So I'd probably give it a little bit more room, but somewhere around these lows right here would be a good risk. And what you really want to see now is for it to take out these areas right here, which looks like it at about 29. So that means you could possibly have about a $3 risk to see if you can get $6 up to 34, whatever. With this type of basing, it certainly is a stock that's been up there again in the beginning of February, and where the rest of the market sold off hard today, this actually did pretty good. And then the last one I'm going to show you is a biotech stock that is kind of one of the new issue stocks I told you about when I did new issues. I did that one. If you want to look at the archives, I gave you a bunch of real issues. Some of them did unbelievably well, Plug being one of them. Red Hill was another one that actually has just soared in the last couple of days. In fact, before I talk about this, since I have some time, this is what I'm talking about with Red Hill. When I talked about it with you, it was probably back in here. It flew, and then it consolidated along this 200, broke out of the 50, and then look, in the last few days, this thing has gone ballistic. So not just because IBB is down, you still always can find things in a sector that might be outperforming. And that's why we're going to look at Beam. This is biotechnology healthcare. And we don't have a real motion indicator. You know why? Because this is not old enough to actually have given us enough momentum information. So this was just good old-fashioned charting on my part. And so we have outperformance of the SPY, volume patterns looking good. It's above here the 50, which is the only moving average we have besides the 10, and it's above the 10. So to me, this might be an interesting play. Maybe I wouldn't do it jumping in on a Friday, wait over the weekend and see what the rest of the market does. But if we can get through, let's say 26 on this one, then I would give it a little bit of room. But it seems to me that if you can give it room to, let's say, around 24 or under these, well, actually 24 would be too tight. 24 is where the 50 is. I'd give it under this low here. This low looks like it's more around 22. So about a $4. It's probably got a big range, this stock. I don't have the ATR up here. I can tell you that, though, in 1 second. Beam's ATR is $1.84. So that would be actually almost a perfect 2 ATR type of risk, and then you'd be looking for 4 ATRs in profit. So that's really basically it. The alcohol pot stocks look interesting. The Lyft and the hogs, transportation, looks pretty good. Beam is another one. And so you can keep your eye on all of these things, but also watch the volatility and those bear flags, and the fact that if IWM, SPY, and Qs go the way of IBB, it could get ugly before we see maybe the government coming into the rescue. Okay, that's it for me today. You all have a great afternoon. Thank you so much for listening, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.